Cathie Wood is buying fear in the market, and we are talking about it. The sharks are in the water. Let's take a look. I do want to thank our sponsor, and that is BTCC. This is a great place for you guys to get in and do some long and short trades. You can get the 10% bonus on first-time deposit, plus you get a slew of features that all come with our link down below. Extra bonuses, 40% lower trading fees, and you get into the VIP program. So very easy to do. Click the link down below. Help us out there. Let's get into a lot of what's happening in the market right now. So let's start off with this right here. And this, of course, is a post by Matt Hogan. Crypto winter started in January of 2025. This is a little bit of a down post. And I just want to be clear. You guys have seen Matt on our show many times. He is very and has been very bullish all through 2025. So maybe it was a realization for him that we are in a crypto winter. And he stated it right here. This is not a bull market correction or a dip. It's a full-bore 2022, like Leonardo DiCaprio, Revenant style crypto winter. He is definitely in a position right now that I think he was not in his past interviews with me. And that was very bullish. So I kind of look at where Matt is coming from right now. Remember, he's now kind of come to the conclusion that he's accepting this as being a very incredibly clarifying moment. And a couple of other points he gets into right here. So when will this end come? Here's the good news. We're closer than you think. Now, I don't know, Matt. I look at, many of our interviews. You've been very, very pro, and bullish. Now we're in a position where we're in a dead winter zone. And yet we're closer than we think. I don't know. I'm just saying, how do we know that is the case? Could we continue on down the line? And I think that's the question everybody's asking, because right now, many of the best investors out there are absolutely getting wrecked. Here, of course, is Tom Lee breaking down his position. Take a look.
When you look at June, when Ethereum was exactly at this price, active addresses is up like 115%. Daily transactions are up 77%. Total value locked in terms of real world assets is up like 50%.
Yep, it's up 23 billion the past 30 days.
Yeah, so this is the opposite of what I would consider to be a crypto winter.
What is he talking about? Opposite of crypto? I can't figure out what Wall Street is trying to do to me right now. It's like up is down, down is up. I'm not really sure where they're going with this. Guys, this is a full-on bear market, and we are in it. Here's a poll for you. How low will Bitcoin drop? Well, let's go ahead and figure this out ourselves. Well, let's look at the market here. We got a sub 65 is in the cards. I mean, considering right now we're recording and it's 73K. We've been down closer to the 70K. Right now we're sub-master. So I am going in on a sub 60. Woo, everybody else thinks we're going to sub 50. A sub 50 if we get into a sub 50. Are you buying that kind of dip with Bitcoin? This would be some times that we have not seen in a while, because that would be a well over 60% drop on Bitcoin in general. Here's Jason Pizzino kind of hitting on all the markers. This is the point I'm getting at. He hits on all these failed Bitcoin narratives. I totally agree with this line list is ridiculous. Just look at that 5-year cycle. Remember that one? That was a good one. Must have blow off top. Remember that one? DeFi summer, NFTs, inflation. All of this, you guys have heard all of these people talking about this. QT ending, QE starting. The one thing that is not here that I think matters most is simple, and that is clarity, guys. We are there. We are at that point right now. Clarity is the number one and only thing that matters for global crypto around the world, is what happens in DC in the next few weeks between the banks and, of course, the crypto cabal. So now this puts a lot of investors in a reflection moment. And the reflection moment is, how do I play this out? Here is a clip talking about that from Cathie Wood. Take a look.
I think investing's the pendulum shift is going to move back to longer term time horizons. What many analysts are struggling with right now is the short-term time horizon they have. From our point of view, we have a 5-year investment time horizon, and we think the payoff's going to be not 5 years. We're going to start seeing, we've already started seeing productivity gain. And so productivity is close to 2% on a year-over-year basis. which is fairly strong for this time in the cycle. We think that's going to accelerate to the 5 to 6% range as manufacturing comes back, as the entire global economy recovers from, I think, the vestiges of an interest rate cycle that really hurt. And while GDP didn't show it, and so if you don't dig beneath that headline growth rate, you can't understand this. When you talk to companies, you definitely understand it.
All right, so I agree with Cathie there in the sense that there is an architecture that may be brewing right now, and this is really about Trump and him trying to onshore industrial productivity and what that's going to look like for manufacturing, just to the ISM data that we just mentioned. But I think the bigger point she's hitting on right here is that long-term bag holding is back in vogue. And of course, I think if you are looking at long-term investing, you still are in the right place. The difference is now many of you, have been looking at crypto for a long time. So maybe this is the shot at trying to catch the next bottom. Now, when that bottom hits is the real question. One indicator that is not playing to our advantage, unless you're invested in metals, of course, is Bitcoin versus gold. Bitcoin versus gold following recent market shift. Gold is now outperforming Bitcoin over the 5-year horizon. Peter Schiff has bought a yacht. Please, and we're at that point right now. Schiff has been on our show many times talking about this very issue. The outperformance is definitely playing out this year. So I do agree. Bitcoin continues to languish right now as it is suffering against gold, even after gold's major retracement and then a bounce, along with silver making double-digit bounce numbers. These are the kind of things that happen to crypto meme coins, and we're seeing this in the metals market right now. So you can see there's definitely some movement. Now, what did Cathie Wood say about gold versus Bitcoin? Take a look.
First thing you should know, Bitcoin and gold are not correlated. If you look at the last 2 cycles, gold led Bitcoin. It has never been higher. It hit a new all-time high this week. Gold is probably riding for a fall because the last 2 times it was anywhere near this was in the massive inflation, so double-digit inflation in the 70s, early 80s. And before that, the Great Depression, that's like emerging market kind of devaluation, right? Back in 1934, the government confiscated private gold, didn't allow any more private ownership of gold, and money supply collapsed. Now, we're not in anything like either of those 2 worlds, and yet gold is where it is. I think if I were a betting person, and I can't give advice necessarily, but I would make a shift from gold into Bitcoin, because I do think the knocks on Bitcoin in the last year have been stablecoins are taking some of the role that Bitcoin was going to play in emerging markets. That's true, but that's not forever. That's just for the equivalent of a checking account. When they want real savings, they're going to buy Bitcoin.
I don't think so, Cathie. I'm on the opposite side of this. Right now, we are looking at a global shift. Remember, the geopolitical powers are now being diced up across the world. And one of the things that many of these sovereign nations are doing is they are falling back into the one asset, tier 1 asset, and that has been gold. Now, does it continue up? That I don't know. What I do know is it's performing and will continue to perform better than Bitcoin, because now we are in a different time than we were in 2021, the last time Bitcoin had major highs outside of last year. That, I think, is definitely not necessarily the way it's going to play out. I think gold is going to position a little bit stronger. Now, does it get the big lift? If you catch Bitcoin at the bottom and we cycle in, Bitcoin will have its run. It's going to have a major run, and it will most likely outperform gold at that time. But is this the time to do it? Let me know what you guys think, Bitcoin or gold, down in the comments. I always love to get insights from you because I think this is a big one. Now, she goes on further to talk about the other elephant in the room, and that, of course, was the 1010 crash and how its effect is still happening. Take a look.
But on October 10th, there was the flash crash caused by a software glitch at Binance. and there was an auto deleveraging event. People were just, margin called to the tune of about $28 billion. We know some of the entities that were caught up in that. They were caught flat-footed. And we think that is just now washing through the system. So if you're looking for something that has weighed on it recently, we do think that happened.
All right, so yes, that is the case. You got to remember, though, that is coming from Cathie Wood, great investor, and she's a great investor because she knows how to talk her book. And if you look at the investment lineup that she's been in for quite some time, well, you've got Circle at the top right there, BitMiner, Bullish, and of course, Block, and even Coinbase. All of these have been on her line list for quite some time, and even others that are very pro-crypto here in the U.S. So, I think funding Binance is a perfect and natural evolution if you're looking at investing. B&B would not be one of them if you were a Cathie Wood, investor. So think about that. The other thing she hit on right here, which is good, against consensus thinking these days, Bitcoin, ETH, Solana, perhaps Hyperliquid could be good diversifiers. Now, that I agree with, because I think we are going to see some rotation into some of these assets as they start to fall and we get better prices. Now, the question is where does ETH go to? Man, Tom Lee has got to be in pain right now as ETH is well be under its analyst anticipation. And then, of course, you've got Hyperliquid. And remember, Hyperliquid rotated into the top position in terms of open interest over Binance. And, of course, a lot of that has been coming on from what has been happening in the crypto drama scene over the last few weeks. So Hyperliquid could be, as many people are getting into now, when they get kind of spooked within the centralized exchanges, they do look at what's happening in DeFi. Hyperliquid winning that one. Let's go into this, though, right here, because this is another point that she hits on. ARK invested and deployed even more into crypto stocks like Robinhood and CoreWeave. So we're going to see more of this. And remember, CoreWeave, huge into and connected with NVIDIA and that whole rotation of what we've seen in the AI space. I'm still soft on whether or not we're going to see a full-blown AI pullback, because that'll be the question. If we see a major pullback on the S&P 500, these lows that we're experiencing right now, guys, are just the beginning. So just be aware. That's the kind of potential market implosion we could be facing. Be very, very cautious out there right now. Trump wants a U.S. economy to keep outperforming, but he also wants a weaker dollar to support reindustrialization. The way that works is it costs less for the U.S. when we onshore companies and manufacturing back into the United States. This does correlate with what he and Besant have kind of been constructing for some time. There is a happy medium, though, that they have to kind of walk. They cannot go too weak on the dollar, because then you have problems where other countries and sovereigns will start to exit U.S. treasuries, all sorts of impacts that could happen from an economic standpoint. The other thing that plays into this is you have to stay and maintain dollar domination. We'll get into that in a minute around stablecoins, but I want to play a clip for you. This is by Jikh, and he talks about the financial America, what it was, and what we are maybe going to, which is more of a productivity America. Take a look.
Because there's really two different US economies, right? This is the one that's built on a strong dollar, cheap imports, rising asset prices, and expanding debt. Well, then there's the other side of America, the productive America. This is the version that actually builds things, produces energy, runs the factories, right? Makes the stuff the world needs. But there's a trade-off. If the US wants to get back to that America, to rebuild its industry, it doesn't benefit much from a stronger dollar. So from that perspective, the US might want a weaker dollar because it lowers the real burden of debt over time, right? It makes making stuff at home more competitive with the rest of the world. It pushes money or capital toward real output and real assets instead of just more financial speculation, which more so benefits industries like the banking industry, because the banks profit more from high interest rates, dollar dominance, and global lending. So the two are kind of in conflict. If you want to win as a country, that's how you play the game. Long term, right? You build real things. That's what China did.
And that is the challenge that we will be faced with, because I don't think they're backing off of this. And it's clear by a lot of the things that Trump is kind of forecasting and giving in terms of signs of where he's heading. Here's a good example from the White House. And this is Project Vault, which is a critical mineral stockpile for American businesses. This, of course, gets into the whole idea of raw materials that are going to be needed in manufacturing so we don't end up with a lot of these disruptions. And we're talking about mostly the chip industry, the battery industry, all those. This plays into it. I've got a clip that kind of explains a little bit more. Take a look.
Hey, Joe, is this kind of akin to something like the SPR, the Strategic Petroleum Reserve? Yeah. Okay, it is. For an investing audience who's listening and watching right now, does that mean basically the U.S. is saying, you know, we're going to support you guys, at least in this administration?
Yeah. Yeah, I think you have this seed money, right? There's about 1.6 billion that's private capital alongside this 10 billion that's going to be from a loan from the Export-Import Bank in the United States. And we've seen some of this before, right? Where it's like you see that there's private money that comes in alongside federal money. The idea being that, okay, if the federal government is sitting here and backing a project, then it makes sense for private investors to say, okay, it's worth it for us to come in too. You have Stellantis, Boeing, GM, or some of the ones we've reported that have already have been brought onto this partnership. Presumably, they will be the ones indicating to the vault, here are the critical minerals that our industries need, right? So automotive or aerospace or other industrial sectors. Well, what does all of this mean when Donald Trump leaves office? And I mean, I don't have an answer. And I don't think even the smartest people who are on the inside of all these things truly can give a firm response on what that means.
This is the point that we are dealing with, because you're in a very precarious situation as the Trump administration, because they're most likely going to lose power in DC, the administration, and that will defang them in a big way. And it will probably put a stop to a lot of this kind of legislation, and even to a certain extent, maybe some of the strategy that Trump has implied. And I think this again gets back into the point that we're dealing with right now. Maybe the economy is lost in the sense of where it's going. Now, could we get into disinflation? Many people think that that is where we're heading, even though you look at kind of the counterbalance to that of what's happening on trueflation. All of this right now is in a very interesting situation, and it all boils down to really kind of two things, I think, and that, of course, is what is our global geopolitical policy? Are we going to continue to kind of contract, get out of UN, try to do something in Greenland, continue to do stuff in South America, or and by far pulling out of this, I think, is going to start to lower excess debt from the United States, because they're not pouring money into a lot of these countries. But if they do rotate this back into productivity, maybe, just maybe, it will work. And he and Bessent, when I say Trump and Bessent, may have got it in at the right time. The other major thing is, how do we handle a support system for the US dollar? Well, that's going to come through clarity. And the reason that's going to come is it's going to boil down to stablecoins. And here was Matt Hogan talking about this, and he says, hey, we took the stablecoin interest debate to the extremes. Banks, if stablecoins pay interest, it'll destroy the modern banking system. And then crypto says, if stablecoins do not pay interest, China will dominate the globe, and the U.S. will become a second-tier nation. I fear that he is, and I love Matt, but I think his position is wrong. You can't look at it this way. This is an existential threat. And what I mean by that, if you look at the fact that stablecoins no longer get interest, and of course are no longer the major asset that major investors would go to, then it eliminates the need for the U.S. Treasury. And that puts the U.S. Treasury back into the global stage of being bought by China or Japan or Europe. And that is a problem, because it's very unstable. They can sell at any time, crash the U.S. dollar and the U.S. economy. That's why I think Trump needs to get the banks on board. It is without a doubt. He is not going to be pro-bank. This is about the defense system of the U.S. dollar as the global reserve, and the U.S. Treasury is the math that makes it work. I think this is not over establishing the position. I think it is saying this is the line in the stand that maybe changes global finance forever. All right, so this boils down to a couple of strategies. One is long-term holding, back to what kind of Cathie Wood is kind of focusing in on. And then I think you're going to see some very strategic plays by the new world order of banking systems. And I think Robinhood is probably going to be one of the big players here. They just announced that they put PAXG available. This is gold now, tokenized gold, available on Robinhood, because they know, as well as I, that we are talking about a new world order of how gold is going to be accrued. This may be a big play for Robinhood, and other things that they're doing, of course, is more announcements. So I anticipate that they've got some more announcements coming that will just take another jab at the banking system, which gets into the point I'm getting at, and that is banks need to innovate. Breaking news, guys, real quick before we end up here. House passes a funding bill now to reopen the government, and they're going to send it over to Trump for his signature. This could be a good thing. At least it's, very short shutdown as we kind of anticipated. This will start to move markets a little bit more, but I anticipate a lot yet to happen this week. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.